The streak continues. The economy has created 200,000 jobs or more in 15 of the past 17 months. 215,000 positions were added in July, with the unemployment rate steady at 5.3%. Wages nudged up just slightly, while the share of Americans participating in the labor force remains stuck at a 38-year low. But experts say the overall report is proof the recovery is chugging along and likely keeps the Federal Reserve on track for its first interest rate hike since 2006. Hampton Pearson has more on the numbers and what they mean for Main Street and Wall Street.
Good work.
For the first 7 months of this year, job growth has been widespread, averaging 212,000 jobs per month. Healthcare continues to lead, up 436,000 for the year, including 28,000 last month. Retailers have added 322,000 new employees as consumer spending picks up. And it was another strong month for professional and technical services, up 27,000, topping 301,000 for the year. Those booming auto sales helped manufacturing have its best month of the year. Workers' hours increased, but wage growth remained stagnant. Overall, a steady-as-she-goes job market for the Obama White House.
It was very much on target. You just look, 15 of the last 17 months, this economy has created over 200,000 jobs. It just month after month, keeps adding to those jobs. That's broadly been bringing the unemployment rate down.
The Washington, D.C. area is experiencing many of those same trends, rebounding from the recession. In fact, the region is experiencing the biggest year-over-year growth in jobs since the economy stalled here 2 years ago. Nearly 70,000 new jobs have been added to the regional economy in the last 12 months, with high-tech and healthcare leading the way. The 4.8% unemployment rate is below the national average.
We don't really have gains in federal employment in D.C., in the D.C. area, but we do see the private sector making up for that, and indeed it's really been a boom economy here in D.C. in recent years.
Today's headline job growth fits the Fed criteria for further improvement in the job market, prompting most economists to say a September rate hike is very much on the table.
I do think that this is one more sort of steady step along the way towards the Fed likely hiking in September. I think it's more likely than not. I don't think it's quite a done deal. We've got 5 weeks of data, and we've learned anything in the last several years. A lot can happen in 5 weeks.
September's jobs report could be decisive as the central bank moves closer to the biggest change in interest rate policy in nearly a decade. For Nightly Business Report, I'm Hampton Pearson in Washington.